All right, so we're going to do a game plan here for the week ahead. Um, Last week, we finished with some really pretty solid momentum. I mean, Friday, it wasn't my biggest green day of the week, but OCEA ended up going up over 182%. This put in a really nice move. It started pre-market low. The previous day, it was at about, gosh, 50 cents a share. But, it rallied up pre-market, pulled back, rallied up again over $1, pulled back, and then into the close went from $1 up to nearly $2.50 a share, which was really strong. So this one finished strong. ATCH finished on Friday up over 100% at 143%. So another one that was pretty strong, that squeeze right into the close. So you ended up finishing the week with strong power hour, which is always nice to see. I didn't really expect it because pre-market on Friday felt a little slow. And I would say we have a little shift in momentum. So if we look at my P&L here, let's see, let's look at overview and then the calendar, or we can look at it this way. So we had this stretch this week of like super hot momentum where things were really moving. It was locking up some really nice big green days. And then it kind of cooled off Wednesday, Thursday, and Friday. Not that I wasn't green, but here's what's interesting. I saw a lot of traders go into a drawdown during these last 4 days because there was a little bit of a shift. Things were really hot for about, a week and a half, 2 weeks. And then I don't know what happened, but I think on Monday, so Monday was a solid green day for me. Traded a number of different stocks. This was my P&L on Monday, popped up, dipped down, and then surged right to 10, up to 12, and then finished the day just over 10,000. And that was thanks to some momentum on meds and SPRC. So SPRC was our big one on Tuesday. But if we look at the chart on SPRC, what you'll notice is that although it made a really nice move, it also gave back the whole thing. It did not hold up. And I think, when we start to see this happening, essentially a stock squeezes up, pulls back, and then just fades, and within 6 hours has done a full round trip, come all the way back down to where it started. This is going to start to be attractive to short sellers because they're going to see, wow, okay, these moves aren't holding up, and then I think that's kind of what happened. Now, if we look at the scanners, let's see the top gap scan for Friday. There was a BDRX, just to point out a few other stocks that similarly did pretty much round trips. So BDRX, this one actually went red on the day, right? So you had this swing, it squeezes up and then pulled all the way back down. Um, I can't even remember all the ones that did something similar, but we had a lot of those kind of moves. ENVB was another one, ENVB. So this trend, this shift happened really on, I would say on Monday with SPRC making that big move, but not holding up. So then on Tuesday, did we see some stocks pop up? Yes, but I was a little bit more cautious on Tuesday because I was thinking, well, you know, things are sorry, we had a market holiday on Monday. So this was Tuesday. And then here on Wednesday, I was like, well, let's just see what holds up. And this was the day we had SOGP. This was on Wednesday. So SOGP and VTYX, which was not an easy one for me to trade, ended up not doing super well on that one. But let's look at those charts. So SOGP, we look at this and we see, all right, yep, this was, another one that squeezed up and then on the daily chart came back down, right? It did not hold up. So what that tells me is that right now there's still some exuberance in the market. Traders are still buying up stocks that are moving, but they're not continuing to buy them after a certain point. And once they start pulling back, it's like traders are giving up on them entirely, and short sellers are overpowering them, and they're coming back down. So it's been about a week since we had one, well, not including OCEA, that popped up, pulled back, and then continued a lot higher. OCEA did, however, in Power Hour on Friday. So now I'm kind of perplexed because it's like this one sort of seemed in some ways like the typical pop and drop, didn't hold, popped and dropped, was choppy, and then all of a sudden it's not giving up, right? We could draw an ascending support line here, and you could see, wow, all right, this thing is holding this level. And then finally it blasts through right here and it's halting up. And now it's like game time. So this is what creates really strong momentum because these moves are going to make short sellers much more cautious about holding something to the short side, thinking it's going to pull back for several days. Of course, it was Friday and it was late in the day on Friday, so I don't know that this really squeezed out a ton of short sellers. But something I would still stand behind is that over the last week, I have seen fewer jackknife rejections than I've seen in a long time. We've, over the past 6 months, we've been seeing so many of these stocks that pop up and just get slammed back down. They pop up and get slammed back down. You'll see it like 5, 10 times on a chart. And my theory, my hypothesis on those moves is that these were some aggressive short sellers who were, or maybe even, not individual traders, but actual trading firm like some hedge fund or, some market maker, I don't know, that was using market orders to slam stocks down when they came up to certain levels. And that had the effect of stopping out a bunch of traders, creating an ugly candlestick on the chart. And for a lot of stocks, that would become high a day, and then the stock would just sort of slowly unwind from there, which would make that strategy profitable. That was until we saw some stocks that just went absolutely insane, like we had, on BMR and HOLO and a few others that just kept going higher and higher and higher. So with this, where it went from 6 all the way up to almost $40 a share, or on Holo, where it went to over or nearly $100 a share, I suspected that that group of, whether it's traders or that fund or that market maker, got blown out. And so since they're not in the market, we haven't been seeing those big rejections. And that has changed the imbalance to the buy side, where that big seller is gone and now the buyers don't have to deal with that or worry about that. But the problem this week, at least on Wednesday, Thursday, and Friday, just seemed to be that we were seeing stocks pop up. There's exuberance, but maybe the underlying catalyst wasn't quite strong enough on any of them. And so as a result, none of them really went like to the moon. They popped up, but they didn't keep going higher. And of course, several of them ended up reversing completely. SUGP, this one, I mean, yeah, look, this went all the way to $9 and then closed the day at 350. So this is sort of what a short seller is going to love, right? And I mean, a long bias trader likes this too for the front side of the move. And I made money on it on Friday on the front side of the move. But we are just like, well, don't overtrade the backside. And then once the backside is in and it's holding below VWAP, like right here, it's just this sort of slow unwind and it just keeps going lower. So, it's a quick move up and then the slow sort of sell off for the rest of the day. And what I'm really wanting to see is the quick move up and continue to profit on that, pull back, and then see them go to 10, 12, 14, 16, 18, and we've got that second leg higher. Because this is where I make my cushion on the day. My first couple trades, I'm breaking the ice, I'm trying to get in the green. And on SUGP, my first trade I made $1,000. And I was like, okay, nice, $1,000 in like 3 minutes. Good job. Okay, now let's watch the next pullback. Next pullback, now I'm up 2,000, 3,000, 4,000, 5,000, 6,000. And then at that point, it started to pull back. I did a couple dip trades. I lost on both of them. So now I'm back to up like 4,000. And I was like, okay, what I'm waiting for now, I've got a $4,000 cushion. I'm waiting for this to squeeze through the new highs. And then I'm going to size up. And that's how I'm going to get myself up, 8, 10, 15,000 on the day. But that just never happened. So I only got the cushion from the first part. And then I wasn't able to use that cushion to help me extend my gains for a bigger move. And that's, for that's going to be a little bit tricky. So that's the reason that my trades from the last few days were a little bit smaller. So anyway, so my trades on Wednesday, Thursday, Friday, I didn't have as big of gains there because I wasn't able to extend the cushion. But as I mentioned, I saw a lot of traders on Wednesday. Here, you take this in, buddy. Let me just finish this and then I'll come over. Sorry. So let's see. So 3,500, right? 3,800, and then 4,200. So the problem was on Wednesday, Thursday, and Friday, I saw a number of traders who did really well during this hot streak swing for the fences and miss. And these are big red days for them. For some of them, it's 20, 30, $40,000 red days. For others, it's $5, $10,000 red days. But these are red days. So I saw a lot of traders give back profit from the hot streak by pushing it a little too hard, overstaying their welcome, and digging themselves a hole. So now the problem is their equity curve is starting to drop back down, right? They're starting to see that pullback. Hey, bud, can you bring that over there? That's just a little loud. It's just echoey in this room. Yeah, into that room. So, so this is like classic. You have a hot streak, you've got some really good momentum, you're doing well, and then you're catching some big losses. And now, you take a 20, 30, $40,000 loss, and it's like, okay, I just gave back a third of what I had made during the hot streak or whatever it is. This is not good. And now things are a little colder. All we're getting, maybe for a few days or for a week or whatever it is that first move. So you can make money on it, but you're not going to be able to make $40,000, $50,000 real quick. The way you make that kind of money is when you have something like the BMR or the HOLO that keeps going higher and higher and higher. That's where the big money's made. So right now, this is more, kind of base hit trading. I mean, look, 3,500, 4,000, $5,000 days, that's solid. Those are solid base hits. I'm not going to complain about those at all. Those types of days add up big time, but they're not home runs, right? That's just not what it is. So what I've gotten better at over the years is instead of having this nice hot streak and then having like 10 red days in a row or going like giving it all back, I might have red days and that'll happen. I might have a red day on Monday. Who knows? Red days happen. It's not the end of the world when it happens. Right. These are some red days. But I've gotten better at being able to sort of let each day stand completely by itself. So whether we're in a hot market or a cold market, my first job each day is to try to build a cushion, right? Because each day I'm starting at zero. So if I'm starting at zero, I want to try to build a cushion, and that means on my first trade, maybe I take 3,000 shares as a starter. If it pops up 20 cents, I'm up 600 bucks. Okay. Does a little pullback, I take another 3,000 share position, it squeezes back up. Maybe now I add another 3,000 share. I've got 6,000 shares, and it goes up 20 cents. That's a $1,200 winner. Now I'm up 1,800 bucks in two trades. Right now, the other way to do it is on my first trade, instead of taking 3,000 shares, I take 12,000 or 15,000 shares. And if it pops up 20 cents, I'm up 3 grand. But if it flushes 20 cents, I'm down 3 grand, right? Now all of a sudden I'm deep in the red. What's my instinct going to be for the next trade? Probably to take 15 or 20,000 shares to see if I can get 20 cents, be up 4 grand, make 4 grand on it and then be up 1,000 on the day. But let's say that one drops 20 cents also. Now I'm down 7 grand, 8 grand. And this is when things start to spiral. And it can happen in a matter of 2 or 3 trades. Next thing you know, you're at max loss or well below max loss. So, yes, in a really hot market, when we're seeing like back-to-back really big days, I am going to start with larger size on those days. Maybe instead of 3,000, I'll start with 6,000. I'll be like, okay, I'm going to take a little bit more risk here because the market is telling me it's worth it to do it, but within reason. And when I came back and sat down on Tuesday morning, we ended up having a great day, which was fine. And then Wednesday, I sat down, and the scanners to me on Wednesday morning didn't seem quite as good. We had a couple stocks that were interesting, but wasn't quite as strong. I traded a little more cautiously. I built a little bit of a cushion, and then I just wasn't able to extend it. It was like, okay, I got my little cushion there, but that was kind of it. So we look at my P&L again on Wednesday, and I actually got some profit here. And then I gave it back on one trade and made it right back on the next one, which was sort of like this little area of chop. And I was like, you know what? Okay, let's walk away there and let's call that a caution flag. Let me be very cautious going into my trades tomorrow, right? So then the next day on Thursday, I'm thinking, all right, take it slow. Same kind of thing. Friday, same thing. Was like, take it slow. And so now I've got 3 green days in a row. Now, these are like, $8, $10, $12,000 of profit total. It's not bad. It's nothing to complain about. And it's certainly a heck of a lot better than having a big red day because I was pushing it and swinging for a home run when the market just didn't want to give it. So, in the last 30 days, I'm at 120,000 here. This is good. I'm definitely happy with it. I was hoping maybe this would continue going straight up for like 2 more weeks and I'd get up to 250 or 300,000 because I've seen that happen before. But right now, we're in a little bit of a slowdown. What I speculate, though, is that that short seller that got blown out on HOLO, a week and a half ago, is still gone. Their account is gone, and they're not coming back. So they took a massive loss, probably a multi-million-dollar loss. They're out. And that firm or that trader or that hedge fund or whatever it was contributing to some of these really huge rejections. So they're out of the market for right now. And it's going to probably take some time for them to get back. So that gives us a little bit of an edge as traders to the long side because you don't have someone trying to bully these stocks and knock them down with these ridiculous jackknife moves. So that's a good thing. And probably what we need is a stock, at some point next week that does something like Ocea that pops up. It just doesn't want to quit. It doesn't want to give up. It doesn't want to die out. And it just kind of keeps hanging in. And then you get that squeeze into the close. Because that's what really got this first round started was HOLO giving us that squeeze into the close. So, I don't know if this is going to carry over from a Friday to a Monday. It might. I don't know if that move is big enough to give us that sort of carryover effect. HOLO, it did, let's see, when HOLO gave us that really big move, I was trying to remember, was that, that was like a Thursday or something. Yeah, interesting. Anyways, it's something that I'll keep an eye on, but OCEA is a little cheaper, and I don't think that it resulted in the type of sort of, real destruction that we got on this move on HOLO, where it went from 12 up to $50 a share. That's a classic short squeeze right there. So that was kind of the beginning of this round, and it gave us, 10 days of pretty solid action. So the question is going to be which one's next. And in the meantime, I'm going to keep sitting down each morning and trying to build my cushion. And some mornings I'm going to build the cushion. I'm going to have a really nice cushion, and then I'm going to be able to use that to extend into a really big day. And other days I'm going to build the cushion, and then I'm going to realize, the 2 or 3 that I've been trading have rolled over. They're not holding up. And all right, maybe it's time to call it quits and not overstay my welcome. And that's fine too. I'll just take those as base hit days while I wait for the next one that goes really crazy. So that's kind of my approach right now. Each morning around 6:30 a.m. Eastern time, I've been opening up my scans, checking to see what the gappers look like. If we have a gapper over 100%, I want to sit down early. If our leading gappers are like 30 or 40%, I don't really care so much to sit down like right at 6:30 or 7 a.m. Doesn't really make a difference. I'll wait until there's more volume and more volatility. But when I am looking at my scans at 6 a.m. or 6:30 and I'm seeing stocks up 100% or more, that's getting me excited that we're going to have a really strong pre-market session from 7 a.m. until 9:30. 7 a.m. is when most retail brokers come online. So we always notice this pattern, and you can see it on SUGP on Friday, just for instance. Let's look at the volume before 7 a.m. and then after 7 a.m. Okay, so let's see. So I'll just make this bigger so you can see. So this is before 7 a.m. And that right there was at 7 a.m. 6:55, and then boom, 7 a.m. The volume like quadruples, and that's very typical. So we see that on most stocks. You see some volatility before 7 a.m., but it's usually fairly limited. And then at 7 a.m., things really pick up. Now, I guess in the case of OCEA, that volume didn't really pick up at 7 a.m. because it was already like basically it retraced the whole move, so people weren't really paying attention. Volume on this one came in once the chart started to break out, which is fine. But when you have a strong chart pre-market, then as soon as 7 a.m., that's like the starting gates. So I want to be there when the starting gates open, when the market's hot. Uh, when it's cold, I just don't feel like it's necessary because the volume when it's cold at 7 a.m. can be lighter. People are a little more cautious. Lighter volume means bigger spreads, less liquidity. It's just not as easy to get in and out. And that's when you can get, especially if you try to hit a big order, 12,000 shares, you could end up losing 40 or 50 cents a share. So then you dig yourself a hole really big and really early. That's not a great idea. So trading early for me is reserved for when it's feeling hot, and I gauge that by looking at the scanners each morning. So if on Monday morning our scans at 6 a.m. just look so, then I'll probably just show up at 8 a.m. or something like that, and then watch news at 8, 8:30, 9, and see if from breaking news we get any opportunities, because that's kind of been the next best spot. One thing that we can definitely say right now is that there are a lot of small cap companies over the last 2 years that have gotten beaten up during the bear market, and they're at basically all-time lows. And so these are all candidates of stocks that could pop up and give us some really nice squeezes off the lows. And that's what I think is going to continue to happen through 2024, that we're going to see these stocks have been beaten up. They've had to do reverse splits. Now the float is super low. And then, they're going to come out with some news. And in an exuberant market where the overall market is bullish, people are going to jump on them quickly and try to capitalize on that bounce off the low. So I'm going to continue to trade those. I'm really happy that we're off to a good start so far this year. You never know. January can be a little hit or miss. Last year, January was a little slow, but this year, January was all right. So got myself some nice profit for the month of January. Let's see. I think I finished January at 30,000 in total, or 35,000 maybe. But now at about 93,000 for the month of February, and we still have a week left. So we'll see if February is going to give me the chance to cross over 100 grand. That would be great. And when we look back at a year that was incredibly strong, like 2020, let's see, we'll do 12, 31, 2020. You'll see how it just kind of came out of nowhere, just like this hot streak did. It really, it's like all of a sudden, um, I gotta look at a different view of this. Gonna do detailed, and then win-loss expectation. So this will show me. So basically, it was relatively slow. Through by the end of February, I was up 100 grand on the year. So I'm ahead of that right now. By the end of March, I was up. Oh wait, no, let's see. Sorry. Yeah, it looks like March was sort of a break-even month. By the end of March, I was still only up about 110,000. And then going into February, I was like 150, or sorry, going into April, 150. Going into May, it was at 250. So May was the first $100,000 month. And then hello, June. What in the world? Over $1 million of profit in June. Crazy good month. And then July a little slower, but like still having these like huge days, and a little slow in August and September, and then October strong, November sideways, and then December strong. So I don't think that this year's going to be like that, but it just goes to show how things can heat up really quickly. So when they start to heat up, I want to be able to capitalize on that momentum and be aggressive. So on that note, this coming week, I'm going to host a live class. It's going to be, my plan is to do it on Wednesday. And now you guys have been filling out the survey for the time that works best for you. So thank you guys who have done that. If you want to attend the live class, then fill out the survey for the time that you want to do. I may end up doing 2 classes depending on, I'm sort of trying to decide what my schedule is going to look like. So I'll put the link in the description. I'll pin it to the top of the comments. You can fill out the survey. And then when you do that, you'll be on our email list. So we'll email you the date and the time and the link for the live class when I host it. So that's going to be coming this week. But plan, most likely I'll have a class on Wednesday, and then I might also do one on Thursday. We'll see. All right, so that's my game plan. I'm going to be traveling back, but I'll be back in my office on Monday morning. So back to the sort of full trading station, which is nice. I mean, I don't mind these monitors. They're really great for traveling. These USB monitors here, they're super skinny. Um, but they're small. They're like 15-inch, and it's you really got to get close. It's just hard to see everything. So I'll be happy to be back on my full trading station, and I'll see you guys on Monday morning. So a reminder, as always, trading is risky. My results aren't typical, so manage your risk. Take it slow, and always practice this simulator before you put real money on the line. Yes, the market is heating up. This is a time that people are going to be really excited, but remember, the market goes in cycles, hot and cold, hot and cold. And if you're just at the very beginning, your best bet is to manage your risk and practice a simulator so you don't make a mistake. And then by the time you're ready to trade live, you know, we'll already, I'm sure, because the cycles go up and down. So you'll capitalize more on the next cycle. So don't get FOMO if you're not fully capitalizing on this one. Just take it as an opportunity to study up and be ready for the next hot cycle. All right, that's it for me. I hope you guys enjoy the game plan for the week. Make sure you hit the thumbs up. I hope you're subscribed to the channel, and I'll put an episode right up here in the corner that YouTube thinks that you're going to love. All right, so make sure you watch that, and I'll see you guys real soon.